We're into the mid to late afternoon on Wall Street, just over an hour from the closing bell, and this market is still trying to sort out a few big narratives. Inflation risk, the surprising strength outside the US, and where the next pockets of US income and growth might come from. I'm Grant Mercer, and this is Storm Stock Solutions, here to keep some clarity through the chaos of the trading day. Since the last update, the macro spotlight has really narrowed onto Thursday's delayed CPI report. According to MarketWatch's Jeffrey Bartash, inflation was already reheating before the government shutdown, even as the jobs market cooled. That's got traders gaming out a tricky setup. If this tardy CPI shows prices have pushed even higher, it pressures the soft landing and easy Fed narrative that's been underneath equities. So into the close, expect every move in bonds and rate-sensitive sectors to be framed against that inflation print on deck. On the equity side, one of the day's more interesting undercurrents is global. Reporting from MarketWatch highlights that emerging market stocks have broadly trounced the S&P 500 this year, one of 2025's bigger surprises. The question now is whether that outperformance can continue if U.S. inflation stays hot and the dollar stays firm. Professionals will be watching EM ETFs and currency moves closely here. Any sign of further capital rotation away from the U.S. megacap complex would be a notable shift in the playbook that's dominated the last decade. In terms of strength themes this afternoon, income and beaten-down energy are on the radar. Philip Van Doorn at MarketWatch put out a list of 10 widely favored dividend names for 2026, many of them in energy, with yields north of 4%. The catch: these are stocks that have already been crushed alongside weaker oil prices. The thesis from analysts is that if you get any kind of rebound in crude or stabilization in demand, that combination of high yield and recovery potential becomes pretty compelling for yield-focused investors. Again, not a call to go buy energy across the board, but this is clearly one of the areas traders are studying as they think about 2026 positioning. We're also seeing some fascinating sector cross-currents in large-cap growth. According to Emily Berry's reporting, Eli Lilly has actually outpaced Nvidia in recent weeks, not what most folks would have predicted a year ago. Historical analysis from DataTrek suggests that after stretches like this, Nvidia has tended to modestly outperform Lilly over the following couple of months, but there are caveats, and history is not a guarantee. Still, it underscores a bigger theme today. Leadership inside the must-own complex is rotating, with healthcare, AI, and consumer platforms all taking turns at the front of the pack. Speaking of platforms, Rosenblatt's latest top first-half picks have Meta leading the list, with under-the-radar names like Applied Optoelectronics and Magnite in the mix. That's feeding into this afternoon's chatter about ad tech, AI infrastructure, and smaller-cap beneficiaries of the broader digital ad and data boom. These are very much watchlist stories into year-end, especially if we see any sustained shift away from the most crowded mega-cap trades. On the sleeper front, there are a couple of themes I'm keeping in the background as we head into the last hour. First, personal retirement choices are quietly becoming a bigger part of the policy and product conversation. Beth Pinsker's MarketWatch column on 401k plans pushing annuities to workers in their 50s is a reminder that more lifetime income options are being dropped in front of everyday savers. That doesn't move intraday prices, but it does shape long-run flows into different corners of the market, from insurers to bond-heavy products. Second media and streaming are back in the spotlight. Lucas Alpert reports that the Oscars will move exclusively to YouTube starting in 2029. Leaving traditional broadcast without one of its last big live events. That's not a today trade, but it's another brick in the wall for the long-term shift from linear TV to digital platforms. Investors will be watching how legacy broadcasters, cable bundles, and streaming pure plays respond to that slow but relentless migration. Into the next hour and into the close, the focus stays tight on three things. Any rate or bond market moves ahead of Thursday's CPI, whether this EM over US story gains further traction in flows and sentiment, and how traders choose to position in it. Dividend and income names versus growth leaders like Meta, Nvidia, and Eli Lilly will be back around the bell with a full wrap of who finished the day on top and where the pressure really settled. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,